move on then to HDFC Limited.
All right, then let's move on. Then the country's largest mortgage lender says it's not worried about low on-balance sheet loan growth, as higher loans are sold is helping the lender get higher returns on equity. In an exclusive chat with CNBC TV 18's Ritu Singh, its Vice Chairman and CEO Keki Mistry says that the offer documents for HDFC Life's IPO will be ready within the next 1 month, paving the way for the first public listing of any insurance company. Let's listen in to that slice.
Don't really care for on-balance sheet growth of loans, because at the end of the day, even if we've sold the loans, it's not that we are booking profits on those loans that we've sold up front. The income that we earn on loans which have been sold come over the life of the loan. So we have a book of about 32,000 crores, and on that 32,000 crores, we earn a weighted average return of 1.2%. Now, on this 32,000 crores of loans which we've sold, we have not provided credit enhancement, so there is no risk that we carry in our balance sheet. There is no provisioning that we need to do in our balance sheet. There is obviously, since there is no risk and there is no provisioning, there is also no capital requirement. So without providing capital, we are earning income, which then significantly enhances the return on equity. So we look at it on an AUM basis.
What about the non-individual loan book? What is the growth you see there? You spoke about a slowing down investment cycle.
So we see, if we look at the fourth quarter of the financial year, where we had the accounts a couple of weeks ago, there we had seen a pretty sharp growth in the non-individual component, and if we had a growth of nearly 4,000 crores in the growth in the non-individual category. Now, non-individual loans tend to be a little lumpy. So it's not that every quarter you would see a similar kind of a growth. There may be a quarter where the growth is a little lesser, and there may be a quarter where the growth is higher. But my sense is that if you were to look at it over a medium to long term, non-individual business has to pick up. Non-individual business to some extent is dependent on the investment cycle. And as the investment cycle picks up for the various reasons I mentioned earlier, pick up in rural demand leading to more people investing, then my sense is that we will see a sharper growth in the non-individual category.
You gave us a timeline for the Life IPO, sometime towards the end of this year, hopefully. Have you appointed bankers for, this 10% stake?
We have not officially appointed bankers, but yes, we have been discussing with a few bankers, and we are now in the process of finalizing things. We should be finalizing the offer document probably in the next 1 month, 1 to 1.5 months, and then look to file with the various regulatory authorities. And my sense is we are on schedule as far as the IPO is concerned, and our original belief that the IPO would happen in the last quarter of the calendar year is still very much on the cards.
You're looking at an IPO for the life business, but the general insurance business where you have a partnership with Ergo. What is the update there? They're looking to hike their stake.
Right. So general insurance, we have a partnership with Ergo. Ergo is a wholly owned subsidiary of Munich Re. And Ergo has clearly articulated their desire to increase their shareholding in the company from 26% to 49%, which is a right that they had in the shareholders agreement. So that is in process at the moment. We have got the regulatory approval. We need to make some minor modification in the shareholders agreement, and that process is still going on. So I would believe that in the next month or two, that transaction should get completed. But there is no plan to do an IPO.
Okay, on that note, it's time for a short break, but when we return, we'll come back and address on TV. That's clearly the stock of the